Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. Well, the big question this week on everyone's mind is, will we see any kind of a signaling that may indicate a timeline for the Fed to taper off their bond buying program? Our strategists say no, and when I say our strategists, I'm talking about Todd Bunton and Brian Boland, equity strategists at Zacks.com, and our ETF research director, Nina Mishra. And so, Nina, you say not only will we not see anything at this week's meeting, not this year.
Yes, I think the economy is not yet there. FOMC members would like to see some improvement, some substantial improvement in the economy before they decide to taper off. And the labor market is still weak. Inflation is not there. Inflationary concerns are not at all there. So there is no question of tapering anytime soon. Further, because of all this uncertainty created by the Fed, because of conflicting signals, there is so much volatility and so much uncertainty in the market, which basically drives investors out of the market. And that is not what the Fed wants. That is not what they have been trying to do for last many months or last couple of years. They want people to invest in risky assets. Right. They want them to invest in stocks.
But you do see some calming language coming out of the meeting this week.
Yeah, because they want to calm the market. They want to reassure the continuance of the current policy, because they don't want a sudden hike in interest rate. We have seen that mortgage rates have gone up above 4%. They are going to hurt housing recovery if they continue like that. So they would like to calm the market and reassure about the continuance of their policy.
All right, Todd, you agree, no news this week as far as the timeline is concerned.
Right.
Is that because the fundamentals really have not changed enough?
Exactly, yep, and I agree with what Nina said. If you look, the Fed technically has two targets, right? One is the unemployment rate, and the second is inflation. And if you look at the last monthly jobs report, unemployment actually increased slightly, and inflation has been relatively tame. So that gives the Fed full free range, basically, to continue with quantitative easing. And I think Ben Bernanke will definitely take that. It's not until we see continued decrease in unemployment, and as long as inflation stays tame, I think the Fed stays, the pedal to the metal, as they say. And it's not just about rising stock market, or a rebound in the housing market. Ben Bernanke actually wants to see that happen, and he's getting it. So I don't see why they would taper anytime this year. I think it's 2014 or maybe even later.
All right, so Brian, you say the meeting's going to be another snoozer this week. But on the topic of Bernanke, over the weekend the president signaled that Bernanke might not get reappointed after his current term is up. And so is that going to be a bigger deal for the market than the tapering?
No, I think right now the taper the paper is the biggest concern that the market has right now. We did hear Obama come out and say that, Bernanke has been in there longer than he needed to be, or longer than he should, or longer than he even wanted to be. Mm-hmm. But he's sticking around to do his duty to the American public, and we're all thankful for that. But definitely the idea of, taper the paper is just a bad caper to sell more newspapers.
Wow.
I was working on that for a while.
How late did you have to stay up for that one?
Just till about 11:30.
So you actually think that the rough ride for the market is probably over. Nina mentioned volatility a little while ago, but you're not seeing it. So does that mean that you see the correction ending here?
Yeah, I do see the volatility. We did have that volatility, but I think, as Todd mentioned, that the unemployment rate ticked up, but yet we gained jobs. So I think that was kind of the best case scenario for the markets, where you had
not too good, not too bad.
Yeah.
Right. So the jobs number is good, but not outstanding, and the tick higher in unemployment means that the Fed is going to continue buying in there. So we're going to have job growth.
So what does that mean? The rough ride is probably over.
That little downturn that we've had, that 3 or 4% correction that has happened over the last, I think probably most of May, there was kind of a slight sell-off, especially the last 3 weeks or so. Mm-hmm. So I think that has come to an end here.
Okay, so you agree with that? Correction over?
Yeah, I think so. Well, it all depends on what the Fed says on Wednesday when they conclude their meeting, and Bernanke's going to have the press conference. I think if he doesn't say, we're going to begin tapering in September, as long as there's no language like that, he might be kind of vague and say, we'll begin to taper once we see material improvements in the job market, but we haven't seen that yet, something like that, then I think the correction is over, and I think we could see new all-time highs on stocks again.
Really?
Yeah.
So you're not looking for, no one here is really looking for any prolonged downturn.
I think as long as the economy continues to slowly improve and as long as the Fed continues with quantitative easing at its current pace, stocks are the place to be.
Okay, Nina, you agree with that?
I agree with that.
Okay, thank you all for that. And so there you have it, latest word on what our folks here, some of our folks anyway, think about the Fed meeting this week. We'll have to wait and see what the outcome actually is. And then at the next roundtable, I'm sure that the other batch of folks will have another opinion. In the meantime, these folks want to give you their opinion on their top stock picks for this week, and you can click over to that right now in the next segment.